Good evening, friends. Welcome you all to StudyIQ English. Students, you must have heard about social media influencers talking about how high indirect taxes in India they are eroding the purchasing power of a common man. You must have read in newspapers or you must have heard in electronic media as well that high rate of GST on products in India it is eroding the purchasing power of a common man. Students, you must have heard people talking that a common man or a person who is earning a less income or who's in a less pay scale, he has to pay the same amount of indirect tax on a particular product purchase as a rich man would pay. Students, in today's class, we're going to discuss GST. We're going to discuss the 56th meeting of GST Council that is presently being chaired by our Finance Minister Nirmala Sitharaman. And students, I'm going to deliver you a good news. Yes, I'm going to deliver you a good news because GST Council is mooting, bringing in certain reforms in the GST structure. Yes, you have heard it right. They are mooting, bringing in reforms in the GST structure and reducing the tax rates on multiple products. Students, let's go. See, new rates, relief on daily use items on GST Council agenda. So students, as I told you, GST Council, 56 GST Council, it is currently being chaired by the Finance Minister of this country, Mrs. Nirmala Sitharaman, and it is reported in the newspaper that GST Council is about to bring in certain reforms. That means they're about to bring in certain tax cuts on the rates of taxes that are currently being imposed on certain products. That means few goods, they're going to become cheaper in future. See, now student, before entering into the domain of GST Council, or the purported changes that are to be brought in the GST tax rates, we have to discuss what is GST, because there might be students who are not very clear about the concept of GST. There might be students who have read about GST, but they'll not be able to differentiate between a direct tax or indirect tax. So in this video, in a brief manner, I'm going to discuss what is the difference between a direct tax and indirect tax, and how and an indirect tax, it is also called as regressive form of taxation. Students, generally in modern tax structures we have two types of taxes. One is direct and another is indirect. So generally in direct taxes, the money is paid from the pocket of the person on whom the tax is imposed by the government. That means the ultimate burden of the tax falls on the person on whom the tax is imposed or the tax liability is imposed by the government. For example, if you are earning income tax, if you are earning income, suppose you are earning income and your income is within the taxable limit. So now suppose you are earning 20 lakhs and as per your income you have to pay 10% of your income as tax. So that means you have, on an average, you have to pay 2 lakh rupees as income tax. So that means the money is going from your pocket and as per the tax liability imposed by the government. Students, generally income tax, it is levied on income, it is levied on property, it is also levied on gains that a person or profit that a person makes from a business. On the contrary, we have another type of tax that is called as indirect tax. As the name suggests, generally it is paid by some another person rather than the person on whose pocket the burdens of the tax falls. For example, you go to a mall and you purchase a shirt worth 2000 rupees. Now the shirt has 12% of GST, that means 240 rupees. Now overall you pay 2240 rupees to the retailer, 2000 for the shirt and 240 for the tax. Now this 240 rupees, it is being paid out of your own money, but this 240 rupees will be deposited to the government by the retailer on your behalf. So that means the person who is depositing the tax to the government and the person who is ultimately paying the tax from his pocket, they are two different people. So that's why it is called as indirect taxes. Indirect taxes are generally imposed on sale and purchase of goods, or they are also imposed on availing of services. So generally students, in our tax structure, indirect taxes are generally GST. So GST, after 2017, we have GST, that is the major indirect tax that is being imposed in this country as of now. And as of direct taxes, we have income tax, we have corporate tax, we have security transaction tax. So all of these taxes are minimum alternate tax. All of these taxes are type of direct taxes. Now students, in 2017, the Parliament enacted GST Act. The Parliament amended the Constitution as well as it passed GST Act 2017. Now students, with the introduction of GST, all the indirect taxes in the country that were imposed till then, they were subsumed in GST. You must have heard about imposition of VAT, that we call as value added tax. You must have heard about imposition of octroi. You must have heard about imposition of excise duty. You must have heard about imposition of entertainment tax. You must have heard about imposition of central sales tax. So with the introduction of GST, all of these goods, all of these taxes, with the introduction of GST, all of these taxes, they were subsumed under the ambit of GST. And now in India, we only have one type of indirect tax, that is called as GST. However, there were certain products that are outside the ambit of GST, for example, petrol, diesel, aviation turbine fuel, natural gas, crude oil. On that, still the old tax structure is prevalent, but apart from these items, in India, nearly on all of the goods and services, we have one indirect tax, that is called as GST. Now, what was the impact of that? First of all, that it brought rationalization in the tax structure, because rather than multiple taxes, now we have only one indirect tax, one major indirect tax, that is GST. Secondly, India became a common market. How did India become a common market? So, for example, before GST, we have different states levying different rate of taxes. For example, in Punjab, suppose a shirt, it might have costed 10% of tax. In Haryana, it might have costed 12% of tax. In UP, it might have attracted 20% of tax. So that's why a single product would have attracted different rate of taxes in a different state. So that's why the prices would have been also different. But with the introduction of GST, as the rate of GST is same throughout the country, so that's why now the products of different goods in different parts of the country, different states of the country would be same. It led to creation of a common market. So usually GST is imposed on sale of goods as well as availment of services. If you go to a market and purchase any product, you have to pay GST. If you go to the market and avail any service, you have to pay GST. Now students, as the central taxes as well as state taxes, they were subsumed in GST. So that's why GST is also called a dual tax, because now whatever amount of GST people pay, taxpayers pay, half of it goes to the central government and half of it goes to the state government. That means, suppose if on a particular product you are paying 100 rupees as GST, 50 rupees will go to the central government and 50 will go to the state government. So that's why it is also called as a dual tax. Now, and depending upon in which state the good is being sold, the GST, half of the GST will go to that particular state. Now, moving on to GST Council. What is GST Council? Now, as we all know, that GST is a tax in which both the states and the central government are interested. So obviously, if a decision has to be taken regarding GST, suppose now the government want to include a particular product in the ambit of GST, or suppose government want to exempt a particular product from the imposition of GST. Suppose now the government want to reduce the tax of GST on certain products, or suppose the government want to increase the rate of GST on particular products. Now, who will take the decision? Union government alone cannot take a decision, because obviously states are also stakeholders. They are also interested in GST, because overall 50% of the GST collection is going to the states only. So that's why a body was formed under Article 279A of the Constitution by the name of GST Council. Now under GST Council, we have representation of both the central government, union government and the state government. So we see in GST Council, we have representation from both central government, that means the Union Minister of Finance, and the state government, that means the state finance minister as well as the finance minister of states that have legislative assembly. For example, Delhi, Pondicherry and now J&K. Now, what is the function of GST Council? I told you in brief manner. The function is to bring changes in GST slabs, bring changes in the GST slabs, or to go for reduction of tax, or to go for increase of tax, or to exempt a product from particular tax, or to bring in a new product into the tax structure. So all of these decisions cannot either be unilaterally taken by the central government, or they cannot be unilaterally taken by the state governments. So they have to be taken by both union government and state government by consensus. Now moving on, how is decision making, or what is the process of decision making in the GST Council? How does decision making takes place? So students, generally, as I've told you, the GST is a concept or it is an element in which both the central and the state governments are interested. So that's why if GST Council has to take a decision, it has to be done on the basis of voting. The voting structure is that union government has 1/3 of power, voting power, 1/3 of votes, and state governments combinedly have 2/3 of the votes. That means union government will have 33.33% of voting share. State governments combinedly have 66.66% of voting share. Now, if a decision has to be taken, it has to be taken by 75% of the votes. So that means neither the state governments can do or pass a decision without the central government's involvement or consensus. Neither the central government unilaterally can bring in any change in the GST structure. So that means the GST Council is a decision-making body that decides the changes that need to be brought in the GST structure. Now, students, what are we expecting? What are we expecting? I told you I'm going to deliver a good news to all of you. The news is that the central government is, or the GST Council is bringing in changes in the GST tax structure. That means they are planning to reduce taxes on most of the products. Right now, in India, we have 4 types of tax slabs. That means we have a GST slab of 5%, we have a GST slab of 12%, we have a GST slab of 18%, then we have GST slab of 28%. So that means a product will be taxed under any of these tax slabs. And somehow people have purported that this makes a tax structure very complex. Because if you are taxing products in 4 different slabs, so that's why it is resulting in overcomplication. So that's why the GST Council have mooted an idea to remove 2 of the tax slabs. So they're going to retain only 5% and 18% of tax slab. That means 12% and 28% will be done away with. Now that means all the goods on which earlier we have 12% of tax, now we have only 5% of tax. See, a 2-rate structure has been recommended, 5% and 18%. Government plans to drop 90% of goods in 28% category to 18% and drop a chunk from 12% to 5%. So that means the goods on which 12% of tax was earlier imposed, now it would be 5%. And the goods on which 28% of tax was imposed, it would now be only 18%. So that means reduction in the rate of taxes. So that's why I was saying I'm going to deliver you good news. The rates of the taxes are going down significantly. For example, if you're paying 12% of a tax on a particular product, now you only have to pay 5%. In the same manner, if you had to pay 28% of the tax on a particular product, now you only have to pay 18%. Apart from that, the government is also bringing in a sin tax. Sin means obviously paap in Hindi, and tax obviously means kar. So sin tax means generally it would be imposed on those products that the government want people to shun. That means the government want people to dissuade, or government want to dissuade people from using certain products. That's why on them high taxes will be imposed. For example, tobacco products. Obviously, their consumption is not good for the health. Liquor, alcohol that we call, and daru that we call in Hindi or Madra. So on alcohol or liquor, the government is planning to impose a 40% tax. So now the thing here is, these goods will be under 40% tax bracket. Now there would be a twofold objective. One, obviously the government wants to dissuade people from using tobacco or liquor products. Secondly, and liquor means generally alcohol, because the liquor that is for human consumption, on them the old tax structure is still prevalent. So alcohol, it is not only used for the purpose of human consumption, it is also used for the purpose of some other things. So that's why alcohol, which will be used for the purpose of some other things, the tax would be 40%. Now the thing here is, apart from that, luxury cars. So luxury cars would also attract a tax of 40%. So that means if a person is planning to buy a luxury car, now it depends upon the GST rules how luxury car can be defined. So if a person is planning to purchase a luxury car, he has to pay 40% of tax to the government. So the government is supposing or assuming that if a person can afford to purchase a luxury car, if he can afford to purchase a car worth 1 crore or 2 crore, obviously he can pay high amount of taxes. This is nothing but a theory of income redistribution. Now, what would be the impact? What would be the impact? Students, obviously when the government is cutting down the taxes, the government has to be complacent with, or the government has to satisfy itself with lower amount of tax collections. So obviously, when the government was taxing certain products on 12% tax bracket, and now it is taxing them on 5% tax bracket, so obviously the tax collection of the government will be reduced, and it is estimated that the reduction in the tax collection would be nearly up to the tune of 50,000 crore. So the government will have to lose 50,000 crore rupees of tax collections with this reform. But this is not the entire story. What comes up now is very interesting. So now, as there would be reduction of taxes, that means people will pay less taxes to the government. So that means they will be left with more disposable income. So if the government was charging, for example, 18% tax on 28% tax on a particular thing, and the cost of the thing was 10,000. So that means it was charging 28%. That means 2,800 rupees a tax. And now on 18%, the tax would be 1,800 rupees. So that means saving of 1,000 rupees for the taxpayer. So going on by this logic, if there would be reduction in taxes, the people will be left with more money. For example, suppose my income is 10,000 rupees daily, and I am paying 5,000 rupees as taxes to the government. I am only left with 5,000 rupees to spend. But suppose my income is 10,000 rupees and I have to pay only 3,000 rupees to the government. I am still left with 7,000 rupees to spend. So that means my disposable income has increased due to lower tax. So now the thing here is, with reduction in taxes, though the government has to satisfy itself with low collection of taxes, it would be compensated by increase in consumption, because now the people all over the country will be left with more money. Obviously, tax will be reduced. They will have more taxable income. They'll be having more disposable income. So that's why when they have more disposable income, obviously they're going to spend the money on purchasing production goods and services. So when they're going to spend money, so obviously it will boost consumption. And when they're going to spend money, when they have more money to spend, obviously they will create demand. When there would be demand, obviously producers will jump into the fray, suppliers will jump into the fray, and they will try to increase the production. When the production will be increased, obviously they will require more people for the purpose of production. So it will result in increase in employment. So now this tax cuts, obviously it will result in increase in employment as well as increase in consumption, increase in demand. So the government is planning that a total of 5.31 lakh crore rupees, or the consumption worth 5.31 lakh crore rupees, will increase. That would be nearly 1.6% of the GDP. Secondly, most important thing, the government is also expecting that it will help soothe the devastating impact of tariff that were imposed by Trump administration. So all of us are quite aware of the fact that in USA, Trump administration has imposed 25% plus 25%, that is 50% of tariff on products that are sourced from India. That means if an Indian product that is having basic price of 1,000 rupees, now 50% of tariff will be attracted, and in USA the product will cost 1,500 rupees. Now when it will cost 1,500 rupees, obviously the price is increased 1.5 times. Now it will dissuade the American consumers from purchasing Indian products. So obviously they will shift to cheaper substitutes. Now obviously it will impact the producers or suppliers in India, exporters in India. Obviously their business will be negatively impacted. Now to soothe this negative impact, the government is estimating it will reduce the negative impact. How? Because now in India, when the tax rate would be lower, so obviously the producer who is producing a certain product, he has to incur less cost. When he has to incur less cost, obviously he can drop the price. He can reduce the margin and he can drop the price. And when he can drop the price and he can send the same product to the USA or to United States of America at a drop price. So now the government is expecting that it will also lead to reduction in the impact of tariffs, right? So with this, we have seen that the government is trying to, let's see what is the final outcome of this particular GST council meeting. I'm hoping that they are going to bring a reduction in the taxes. It was purported by the government itself that it is planning to reduce taxes on certain products, for example ACs, air conditioners, or electronic products from 28% to 18%. It's also planning to reduce taxes on the goods that are used for daily household consumption, for example shampoos, toothpaste, from 12% to 5%. So obviously they're gonna get cheaper if the producer is willing to just carry on the product, or they carry on the change in taxes. So students, in today's class we have discussed about GST in brief. We've discussed about GST Council. We're going to discuss, we have discussed about 56th meeting of GST Council. We've discussed about that the government is planning to bring in reduction in the tax rates, and we have discussed what would be the impact of the reduction on the overall spending in country, on the pocket of the people, and will it lead to boost in consumer spending, increase in demand, and finally increase in employment. So I'll wind up the video at this. We'll meet with a new video, and if you want me to make a video on a particular topic, especially topic related to constitution, law, or polity, you can comment in the comment box and we'll make a detailed video. We'll conduct a detailed discussion on that particular topic so that you'll be able to understand the topic in a comprehensive and detailed manner. So with this, I'll wind up the video. I'll meet you in the next video. Till then, stay happy, stay blessed, put your efforts towards achieving your goal. Jai Hind.